Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
Okay, so today we have Annelise Osborne with us, and she was born and raised in the Marshall Islands, which is completely fascinating to me, and now she's into finance and cryptocurrency and stablecoins. So Annelise, it's great to have you. I just kind of would love to hear your origin story of how you got from the Marshall Islands into cryptocurrency, shall we say.
Well, Bruce, thank you so much for having me. It's great to be here. What's funny is the Marshall Islands is actually looking at doing stablecoins. So it's kind of funny, like full circle. But I grew up on Kwajalein, which is a military base in the Marshall Islands. It's mainly government contractor, so it's less military, and they worked on missile defense. And so that was, it was great. We had bicycles, not cars, rode around the island, two and a half miles by half a mile. It was tiny. And then I went to William and Mary for college, and then I worked in Europe for a few years. 5 years I worked in Ukraine and then London. I was doing real estate, actually. I did real estate in Ukraine initially. It was Ukraine's first office building because it was going from a centralized economy to an open economy. And so they were looking at creating office space. So I did that with Jones Lang Wooten, and then Jones Lang LaSalle. I've been around a few years. And then I worked with them in London as well. And then I went to business school in New York. I went to Columbia. I wanted to come to kind of Wall Street and do big finance. And what was super interesting for me at the time was, always looking for something innovative and something to learn. It was kind of the beginning of CMBS. It wasn't the very beginning, but it was really just when CMBS was kind of getting started. So if you think about commercial mortgage-backed securities, they actually decreased the cost of financing. So they were novel in the attempt that they actually took the risk off the bank's balance sheets and shifted that over to bondholders that were able to choose the risk that they wanted to buy. So I do think that that was interesting and fun at a time that made finance more efficient as well.
Well, but that I'm going to ask the question whether that led into the famous 2007 meltdown.
We can have a whole conversation on that. Especially coming from Moody's as a rating agency. I think a lot is, to be honest, if we look at a lot of times when you're creating financial structures, you're looking you're looking back as opposed to forward. And if you look historically and that was really more residential oriented, to be honest, because I think there was more of a push for everyone to own their own homes versus commercial is different because commercial, you have income coming in from an investment. So that's contracted. So it's a little different play there, but there was fraud in some of the loans that were out there. There was misreporting, but also if you looked historically, there had been no defaults in home loans previously before the interesting new structures of financing came about. They were very low, very, very low. Yeah. So it was difficult but the world changed, and yes, there was quite a financial crisis in 2008. I got into crypto back I left Moody's when 2015, I think, and I was really working in kind of a bit more startup-y worlds, but I was working with hedge funds, private equity, family office, and starting up new business lines. And I was doing a lot of board work, so corporate governance. And I was asked to to join the board of the cryptocurrency and blockchain regulatory task force. And I was not familiar with ICOs, which are initial coin offerings. I'd heard the term, but I didn't really know what they were. But they were very energetic young lawyers who called me often. And so finally I decided to sit down with them because I figured I could, I'd learn about blockchain. And so I did a lot of research, and the research, to be honest, at the time, this is 2017, was really online and YouTube. There wasn't a lot out there, but kind of understanding what blockchain was and how it could benefit and underlie the financial system, to me was, it was just an eye opener, thinking, I'm sure other people are doing this. But it turned out the other people that were doing it, and my thought process is upgrading finance. How can we use the technology to make capital markets more efficient? Both from a debt perspective, especially you can create programmable securities, right? Programmable loans. But the people that were doing it at the time really were the hoodies in my, my hoodies.
Here comes the hoodies. All right. Yeah. Right.
So the hoodies being kind of the entrepreneurs and the tech people who created, admittedly, a $3 trillion industry at this point with the whole crypto world. But it was obviously much less then. But the idea was that for how to do this from an institutional perspective, if you don't have the experience of the suits being understanding regulation, understanding structure, understanding kind of why finance is shaped the way it is, you have a lot of false starts and you have a really negative connotation associated with the technology already to come in to work with institutions. And so that really excited me. I found a partner who had a broker dealer and we launched digital asset securities back in 2018, which was early. A lot of the infrastructure wasn't there. A lot of it's being built now. It's super interesting times now with the current administration and the real push for keeping innovation in the United States. And from a regulatory perspective, I think the world is changing as well to be more open to ideas of innovation.
Well, and along came stablecoin and some other things probably that made it look a little better in terms of being not quite as volatile.
Sure. So yes, I think the ETFs as well, there's more institutional interest in alternative asset class for investments. And one of those alternative asset classes has been Bitcoin, which is they've put into a very formal, an ETF wrapper, which is we can buy it off of our, 401ks or brokerage accounts. So it's a lot easier than for people that are non-crypto native or don't have like a wallet. Because in the non-crypto world, like in a traditional world, we have accounts, but in the crypto world, you have wallets. So it's really very similar. So I think sometimes the nomenclature is different, but generally it's a very similar world. But I feel like it's just kind of an upgrade with the wallet because there's more functionality. And part of it is how do we do this in a regulated fashion? How do we present it so people don't know they're using blockchain, which I believe if we want to dive into your comment about stablecoin, we can do that too. So if you think, then we
can jump into the whole tokenization of real estate, which would certainly, I think, hopefully stabilize the whole crypto world in an interesting new way.
Sure. Well, what would you like to talk about? Like, we can talk about this for a long time.
Well, I think the point is that maybe a lot of the listeners don't even know what tokenization of real estate might even be. So maybe we could start there.
Sure. So the idea of, a token is a digital representation, right? If you go to kind of Bitcoin, the white paper was written in 2008, 2009, Bitcoin came out. And if you think about Bitcoin, it's kind of like a digital currency is the idea, right?
Right.
So if you think also switching over, there's just different ways you can you can actually break up a fund structure, right? So if there was, for example, a token is in essence a representation of ownership in this instance, right?
Well, so, a paper dollar is sort of the same thing, right?
Yes. So there's Aspen coin, for example. Aspen St. Regis was tokenized back in 2019, I believe it was. And the Aspen St. Regis is a hotel at the base in Aspen. And so the idea of people wanting to own shares of a hotel with actually not having to buy the whole hotel, kind of the idea is that it opens up investments for more people. And it also gives access to someone looking to bring in more investing as well, because the buy side and the sell side. But the idea is democratization. So I think for that one, that could be one idea. That you could own a piece of the Aspen St. Regis and then that trades, and it still trades today. So that's an example of it's like a tokenized share in the Aspen St. Regis Hotel. So there are there's other ways to tokenize too. You could tokenize loans, but to be honest, if you're tokenizing a loan, it's still a loan, right?
Right.
It's just held in a different format. And the idea with tokenization is it's faster, cheaper, and more secure, right? So faster because it's digital, and so you can actually there's different ways you can make digital faster, but the idea from a trading perspective, I can immediately send it to you.
Right.
Less expensive. I think any technology that would be adopted needs to either you need to make money or save money on it. I think blockchain is huge in back office transactions that makes them much more efficient because they can be programmed. You have fewer people. Think about it as like a very large Excel sheet where everybody, like a Google Doc where everybody's putting things in. But the thing with blockchain is that it's an immutable ledger, which brings it to the security aspect too, is that you can add a block on top of the block, but you know where it was before. People talk about title insurance, for example, right? Like that, a prime example. So title insurance in essence is like who owns, you can think of them as blocks, right? Like
right.
Table goes to this, to goes to this, to go, and it's immutable ledger that you can't change, but you can always go back and see what was there. And so that, in essence, if you're thinking about tokenizing, use the Aspen St. Regis, you can see kind of who it traded to and when it traded, so you know who owns it. Now there's different when you're dealing with a security, kind of the KYC AML aspect. So you can only transfer it to someone that is on the whitelist of KYC AML because it's a security. It's a little different than, say, Bitcoin, which is a currency that can trade to anyone that wants Bitcoin.
Right. Or, yeah.
So if you think of
the analogy, I don't know if there is an analogy between what Robinhood did and, to stocks is maybe what tokenization is going to be to real estate.
There's different reasons, kind of like why would you want to use tokenization? Well, I think from a back office perspective, you think it's much faster because things can be programmed and lower cost. So what's happening right now, a big thing is the tokenization of funds generally, right? If you look at, so there's money market funds that have been tokenized.
Really? Oh, wow.
Private equity funds that have been tokenized. We're working on a real estate fund that's being tokenized. But the idea of it is that you can actually, people are looking for more opportunities to invest. There's fewer public companies today than there were before, and there's many more private assets than there were previously. And usually the people that have access to them are kind of the ultra high net worth. But if you are, who's Franklin Templeton, Apollo, for example, or Hamilton Lane, they've done private equity funds. But usually the minimum buy-in is, say, $5 million.
Right. Yeah.
But if you can tokenize it, it's a lot cheaper. You can have more investors in it. So now I believe it was $200,000.
Oh, okay.
So you can actually, but that's hugely beneficial for these large asset managers who are trying to increase their assets under management. And to do that, they need more funds to come in.
Yeah.
And everyone's going to the same pool of ultra high net worth, right? Or
right.
Or but this way it actually opens up the playing fields because there are so many people out there that would really be interested in having that opportunity. I mean, personally, I think about where can I find cash flowing yields.
Right.
It's easy to, obviously you can go to stock market or you can go to, I've actually now have a Robinhood account, which generally Robinhood is like 85% of them are under 35, which is also interesting to me to think of, like, what are the next generations and how are they thinking about investing?
Right. Well, so I don't know if you can answer this question, but do you think there will be a time when a 1031 exchange could exchange their money into a tokenized piece of real estate?
Well, see, I look at even as, I think the answer is yes. Larry Fink of BlackRock thinks everything will be financial services will all be tokenized.
Oh, yeah. Okay.
It is more efficient.
Right.
So for me, a tokenized stock or a tokenized fund or a tokenized bond is still that. Like it is still a bond, or it is still a loan, or it is still a fund, or it's just the technology behind it. If you think about your cell phone, you don't ask how the technology works necessarily. You just have the applications and the functionality of it, right? So I feel that's what we will have as well. It's just increased functionality and applications for things like tokenized real estate, which can help decrease the costs of the back office transactions.
Yeah.
And then it can actually open up investment markets to more people.
So it sounds like, how long ago was the St. Regis?
It's 2019.
So 7 years ago.
Yeah, pre-COVID.
Oh, that's interesting.
There's I can talk about some other ones that have been done, some other interests. So Figure is a company that does tokenized HELOCs. And different types of loans. It is much faster to go on. You can go on their website and put in your data and information, and it's a lot faster. And they save think it's approximately like 85 basis points on every deal. If you think, but that's
Wow.
a fee perspective. That actually is a lot when you add it all,
Yeah.
put it all together. So, and they're using tokens. You don't need to know that you're using tokens. You're just getting you're getting your HELOC, right? So that's one big company. There's also Redwood Mortgage or Redwood Trust, sorry, did they did I believe it was a CMBS transaction. I would have to go back. Figure has done a CMBS or an RMBS transaction as well. Redwood Trust did tokenized loans also. So I feel like there's people stepping up, figuring out, and why I think fixed income works so well for it is, anytime you look at like any loan is in essence an Excel spreadsheet of who pays when. Any PSA, like pulling and servicing agreement for, structured finance or loan agreement, it's like an Excel spreadsheet, even though it's a legal agreement, because it's who pays when and what and conditional. And that so much of that can be programmed, and that can be programmed onto smart contracts, onto a token.
So it sounds to me like Bitcoin and tokenization and all this digital currency is now going to become more and more respected, let's call it. Obviously, there was the big flash in the pan that happened several years ago, but that scare, I think, is over. And now people are realizing this is definitely going to happen, and it's going to happen fairly quickly.
So I do want to differentiate between cryptocurrencies, which are Bitcoin, Ethereum.
Okay.
That's one thing, right? Because they're not actually backed by an underlying traditional security, right? Those are generally
okay.
So I look at them as cryptocurrencies as one bucket, which is, to be honest, like that's an alternative asset class almost, because
That's by itself.
It's volatile performance, right? It's a little bit like gambling because there's so many cryptocurrencies out there. But then also the idea of upgrading finance how it is today, right? Like tokenizing real estate investment, that actually I feel like is different because they already exist today. We're just making the back office more efficient and opening it up to more people.
Well, and there's an asset behind it.
There's an asset investment behind it.
Whereas cryptocurrency, there's a spreadsheet or a blockchain or,
there's nothing necessarily behind it that you can't, the valuation is what the market perceives it to be.
Right.
So it's a little bit different in that terminology. But to your point, yes, I do think that cryptocurrencies as an alternative asset class, but also the recognition of blockchain and what blockchain can help build out.
Right.
Because cryptocurrencies are built upon blockchain, right? So
right.
So I think that is being much more recognized. If you look at, I went to Davos this year, and the CEOs of the banks and large insurance companies, investment companies, asset managers they almost all mentioned tokenization or blockchain.
Wow.
Super interesting, I thought.
Yeah.
But everyone's looking at how can you do things faster and cheaper. JP Morgan does a lot of repo transactions on blockchain.
Oh, really?
And they save millions and millions. And I don't remember I haven't heard the most recent structure, but
it's saving a bunch of money.
Before when they were testing it out, it was like $20 million. But I don't know, like last year, I'm not sure they did it much. They did, multiples of what they did before. So it had to have been in the hundreds of $millions of savings, because it just makes it more efficient, and you can trade looking at interest instead of paying for interest for 24 hours, you can do it to the minute, right?
Yeah, right.
You don't need it for 24 hours. And so
right.
It's just, and another thing I'll go to is look at the floor of the New York Stock Exchange 20 years ago. It was bustling, shoulder to shoulder. And now it's used for media. And so the difference there is, I think
nobody's there basically,
more or less, right? And it's really kind of because technology has made financial markets more efficient, and blockchain is the next step to that.
Yeah. Well, let's talk about your book for a minute.
So I wrote a book, because so many people didn't understand what blockchain was, and they would tie it to kind of cryptocurrencies and, it's all a fraud. There have been bad actors in the crypto world, just like there's bad actors in the traditional finance world. Especially sometimes you might have, Hoodies getting over their skis because there was so much money there that they had made, right? And so that's why I think, so I wrote a book called From Hoodies to Suits, Innovating Digital Assets for Traditional Finance. The whole goal is to have a book that is ideally educational and entertaining. So it's not a textbook, but to explain why this technology is important, why we should care. So who's doing it now, why they're doing it, the changing of the guard with, the money that's all going to millennial and Gen Z, because there's a great wealth transfer happening. If you look at them, the generations are much more digital. And then just an understanding of like some of the terminology, so you get it, and kind of where I see the world going. And it's really just, it's just a more efficient, more opportunities. But companies need to think about it, because if you don't, you'll be left behind, right? You don't like Blockbuster or Kodak. So
yeah, no, I think that's absolutely right. So I think we could probably go on for another couple days about this, but I think we're going to hold the horses at that point.
Yes.
And I just love the conversation. So where can people get a hold of you, and Annelise?
Oh, great. So I am LinkedIn for Annelise Osborne. I also am chief business officer for a blockchain called Cadena. So cadena.io. And I'm happy for anyone to reach out just to learn more. My book, From Hoodies to Suits, is available on Amazon and Barnes & Noble and any other book kind of site out there. Wiley published it, so they're very good at distribution. But I'd love to connect and just help educate. That was what the whole goal of the book was, just to help educate, for people to understand.
Well, and quite frankly, we all need a little more education in this whole world, particularly tokenization and blockchains, and what the difference between cryptocurrency. So I think that's fantastic. So,
well, thank you for having me on, Bruce. I really appreciate it.
Well, thank you for being here.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.